Avoiding overtrading and burnout is not about trading less out of fear. It is about trading with respect for limits that exist, whether you acknowledge them or not. Overtrading and burnout are not sudden failures. They are slow leaks. They develop quietly through small compromises, subtle justifications, and the belief that more effort must always lead to better results. Trading literature written by those who have survived long enough to speak honestly is remarkably consistent. On this point, most traders do not fail because they lack opportunity. They fail because they exhaust the very mental and emotional resources required to use opportunity. Well, overtrading almost always begins with a misunderstanding of productivity. Many traders equate activity with progress. Clicking buttons feels like work. Watching markets feels like commitment. In reality, trading is a decision-making profession, and decision quality degrades with volume. The more decisions you force into a session, the lower the average quality becomes. Overtrading is rarely about greed alone. It is often about discomfort with waiting boredom or the need to feel useful. Recognizing this is the first step toward avoiding it, because it reframes overtrading as an emotional coping mechanism rather than a strategic choice. Burnout, meanwhile, is the cumulative cost of ignoring recovery. Trading demands sustained attention, emotional regulation, and tolerance for uncertainty. These capacities are finite. When traders extend sessions, unnecessarily monitor markets obsessively, or carry emotional residue from one day to the next, they slowly drain these reserves. Burnout does not announce itself dramatically. It shows up as irritability, impulsive entries, reduced patience, and the quiet loss of joy in the process. Trading literature often describes burnout as a systems failure, not a personal weakness. It arises when structure does not protect the trader from themselves. One of the most effective ways to avoid overtrading is to define participation boundaries in advance. This means deciding not just what you will trade, but when you will trade and when you will stop. Clear trading windows, maximum trades per session, and daily loss limits act as circuit breakers. They remove the need for constant self-negotiation. When boundaries are predefined, restraint becomes mechanical rather than emotional. This design-based discipline is far more reliable than willpower in the heat of the moment. Another crucial element is redefining success. Traders who burn out often measure success by how involved they were rather than how well they executed. Avoiding burnout requires shifting the metric. A day with no trades taken according to plan can be a perfect day. A session ended early because conditions were unclear can be a professional decision. Trading literature consistently emphasizes that longevity is built by honoring inactivity as a valid outcome. When sitting out is treated as success rather than failure, the pressure to overtrade diminishes naturally. Energy management is also central to this conversation. Trading does not reward grinding. Fatigue narrows perception and accelerates impulsivity. Traders who avoid burnout learn to trade when their energy is highest and step away when it fades. They schedule breaks, limit screen time, and protect sleep aggressively. These are not lifestyle preferences. They are performance requirements. A tired trader may still feel motivated, but motivation cannot compensate for reduced cognitive capacity. Another often overlooked contributor to overtrading is information overload. Constant news, social media commentary, and market chatter create a sense that something is always happening, and therefore something must always be done. This environment fuels urgency. Traders who stay balanced learn to control inputs deliberately. They reduce noise during trading hours and consume educational material outside of execution time. Trading literature repeatedly warns that more information does not equal better decisions, especially in real time. Clarity often improves when input is reduced. Avoiding burnout also requires honest reflection on why you trade when you should not. Journaling plays a critical role here. When traders record not just trades, but reasons for taking them, patterns emerge. Overtrading often clusters around specific emotional states, such as frustration after losses, excitement after wins, or boredom during slow markets. Once these triggers are identified, preventative rules can be designed. This turns burnout prevention from a vague intention into a concrete system. Perhaps the most important shift is accepting that rest is part of the job. Many traders treat rest as something earned after success rather than something required for it. This belief is dangerous. Trading literature from high performers in other domains, such as sports and aviation, consistently shows that recovery is what sustains performance under pressure. Stepping away does not mean falling behind. It means preserving the capacity to make good decisions when it matters. Ultimately, avoiding overtrading and burnout is about designing a trading life that is sustainable rather than heroic. It means choosing fewer higher-quality decisions over constant engagement. It means respecting mental and emotional limits as seriously as financial ones. And it is precisely at this point, when the trader stops trying to prove commitment through activity and starts expressing professionalism through restraint, that overtrading loses its grip and burnout is replaced by a steadier, calmer relationship with the markets. One that continues to deepen as long as structure recovery and self-awareness are given the same importance as strategy and execution. And this is where the deeper work of protecting longevity in trading has not yet fully reached its end. Because once sustainability becomes the priority, avoiding overtrading and burnout stops being a defensive act and becomes a form of strategic intelligence. This is where traders begin to see that restraint is not the absence of ambition, but its refinement. They no longer ask how much more they can trade without breaking, but how little they need to trade to remain sharp, focused, and emotionally intact. This shift changes everything, because it reframes trading from an endurance test into a practice of precision. At this level, traders learn to recognize early warning signs before damage is done. Overtrading announces itself quietly, at first slightly looser criteria, faster decision-making and urge to just take one more or difficulty stopping at the end of a session. Burnout whispers before it shouts, declining curiosity, irritability, mental fog, and a subtle loss of respect for rules. Traders who last do not ignore these signals. They treat them as risk indicators, just as real as drawdowns. When signals appear, exposure is reduced, sessions are shortened, and rest is prioritized. This responsiveness prevents small cracks from becoming structural failure. Another important practice at this stage is deliberately limiting opportunity. This sounds counterintuitive, but it is powerful. Traders choose fewer markets, fewer time frames, and fewer setups than they are capable of trading. This artificial constraint protects depth of focus. It allows mastery to form instead of constant scanning. Trading literature often notes that professionals trade far less than amateurs, not because they lack opportunity, but because they understand that attention is a finite asset. Overtrading is often the result of spreading attention too thin, not of greed alone. Avoiding burnout also requires emotional boundaries, not just time boundaries. Traders learn to stop carrying the market with them after sessions end. They close platforms, shift environments, and intentionally disengage. Without this separation, stress accumulates invisibly. The mind never fully resets. Over time, this constant low-level engagement erodes patience and increases impulsivity. Treating trading hours as contained rather than all-encompassing preserves emotional freshness and makes each session feel intentional rather than compulsory. There is also a deeper identity shift that helps prevent burnout. Traders who tie self-worth to daily results experience constant emotional turbulence. Those who tie identity to process experience stability. When identity is process-based, a quiet day is not a threat, and a losing day is not an indictment. This internal separation reduces pressure to overtrade for validation. Trading becomes something you do well, not something you need to prove continuously. Over time, avoiding overtrading and burnout becomes less about rules and more about rhythm. Traders develop a sense for when to engage deeply and when to pull back. They accept that some periods are for participation and others are for observation. This rhythm respects both market conditions and personal capacity. Trading literature often frames this as professional pacing, a skill that distinguishes those who have short bursts of success from those who build careers. Ultimately, avoiding overtrading and burnout is about respecting the long game. Markets will be open tomorrow. Opportunities will return. What must be protected is the trader's ability to participate with clarity when they do. By designing boundaries honoring rest and redefining productivity, traders replace exhaustion with endurance. Trading becomes calmer, more selective, and paradoxically more effective. And so the true solution to overtrading and burnout is not discipline through force, but discipline through design. When your environment, routines, and rules support restraint, automatically willpower is no longer constantly tested. Overtrading loses its appeal. Burnout loses its momentum. What remains is a sustainable practice where focus is preserved, learning continues, and trading becomes something you can return to each day with respect rather than resistance. A relationship with the market that is built not on constant engagement, but on the wisdom of knowing when enough truly is enough.